Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome to another episode of the Brisbane Property Podcast. Market update time, and the data comes from December, obviously moving from 22 to 2023.
Yes, welcome back everybody. We're really excited to be presenting the most recent update in terms of what's happening in the Brisbane property market right now. Obviously, we're going to report on the data. We're going to reflect back on what we saw throughout 2022 and also discuss what we expect might happen in 2023. The good thing is we do have a couple of weeks under our belt now of the new year, what we've seen out and about on the ground. And what is interesting is that we've seen a bit of a shift, and we are going to talk about that in the podcast today.
Yeah, so what an interesting 2022. If we move from where we've, in that 12 months, I guess, what's happened and where we've been, the market was going crazy this time 12 months ago. Things were going to be quieter. We've had interest rates. We've had floods hit Brisbane. There's been so many things happening. It's amazing how Brisbane's changed and what has happened in that time period from the beginning of 22, 12 months later to now the start of 23.
Yeah, if we look at the beginning of this time last year, commentators were predicting really strong price growth for Brisbane throughout the months ahead. Now, who would have known that we had that significant flood event in February? And then, of course, we had market changes as a result of escalating inflation and the fastest monetary tightening cycle in terms of interest rates since 1994. We had a total increase of 300 basis points across the year. So that's a huge change. And of course, that really caused a mass media response that was quite negative. I recall the very first, interest rate rise that we had last year, and it felt like it was Armageddon the way it was reported in the media. But ultimately what this does is it impacts consumer confidence. And we saw a huge shift and change in consumer confidence in the Brisbane market in the latter months of 2022. And it'll be interesting to see how that changes as we start a new year. And obviously with a new year comes new goals, new priorities, and a fresh start for everybody. So let's see what the year brings in the months ahead.
Yeah, it is interesting when you talk about that and you look back at it and the floods, and we've had floods before. We tend to recover and, people rebuild, and what they do, clean up and we move on. When the interest rate things started to change, the media had a massive impact on that. It wasn't so much about the floods and recovering from that. It was about the interest rates and what impact that will have, and the amount of pressure that put on people thinking about what they would do, whether they would purchase more property and to what level they would do. So that had a huge impact, I think, on, as you said, the confidence for people out there wanting to buy property as well.
And I think that one thing to always keep in mind is that Australia is not one property market. And throughout a lot of last year, the media were reporting information that the market is declining. Sydney is declining, Melbourne is declining, Brisbane is declining. But the reality is, and what we'd like to go through today, is that the fundamentals for each specific property market throughout the rising interest rate period of 2022 and still today actually remain somewhat different. So we're going to take a bit more of a look at that today to outline what those differences in the fundamentals are. I think a mistake that a lot of people make is relying on those big macro data trends, and they apply those trends equally across the board. And you simply shouldn't, or definitely shouldn't do that, because what we see is that those quantitative data trends, that is the big data that is reported, it doesn't always play out when we overlay that with the qualitative data. And forgive me, my research background makes me use some of these words, but quantitative data is the numbers data. The qualitative data is what we collect by being on the ground, by inspecting properties, by meeting with buyers, by seeing how many people turn up at open homes. And it's combining both of that, or both sets of data, I guess you could say, to really get a good perspective on what's happening in local markets, because it's not the same in every suburb in Brisbane, nor is it the same for every property type. And we're going to unpack that today.
So before we jump into the fundamentals, and this is probably a little bit of a personal one, but over the break, we actually spent a couple of weeks in another capital city in Australia. on the other side, I guess, if you want to put it that way, to Brisbane,
On the West Coast.
on the West Coast. And it was really interesting, even though we were trying to have a break from work a little bit. We did have a lot of discussions on the way that different cities are and how developed they are, the infrastructure, the property, just the actual feel of the different locations. The fundamentals which I'm getting towards in Brisbane is what we're seeing happening here in Brisbane and the changes that have happened and that are rapidly happening. I think as we start to escalate towards that 2032 Olympics, especially, the infrastructure and the changes and the developments that are happening in Brisbane and how Brisbane has and is changing was really, really noticeable when we spent time on the West Coast and seeing how those areas are as well.
Absolutely. So let's take a bit more of a deep dive into some of those fundamentals. And I think when we look at fundamentals in terms of price movements, we really want to consider the balance between supply, that is, what number of properties are available for sale or for rent, and how that overlays with demand, and that is how many buyers are in the market to buy or to rent at a particular point in time. Now, despite what you may have read or heard in the media, these are some facts, and I'm going to read these out. So according to SQM research, in December last year, so December 2022, there were a total of 19,335 properties for sale across Greater Brisbane. Now, if we compare these figures to 3 years ago, that is pre-pandemic, so that is December 2019, what we had available for sale in Greater Brisbane at that time was a total of 28,368 properties. Now, if we do the math, that's a decline of 32% in the number of properties available for sale. And that is an indication of supply. So that's a huge difference.
Yeah, massive change.
Now, if we look at the rental market, and I just want to give a snapshot view because we are talking fundamentals. Again, I'm looking at SQM research data. On the 1st of January 2023, we had a total of 5,158 properties available for rent across Greater Brisbane. However, 3 years earlier, on the same date, 1st of January 2020, there was a total of 11,098 properties available for rent. Take in those numbers because these are huge changes. It represents a decline of available rental properties across the last 3 years of more than 50%. Now, you've got to realise that this is happening at the same time as Brisbane has experienced very strong population growth. And we talked about this in last month's market update. So there's some very, very strong fundamentals to support property values, to support rental price growth continuing to occur, but also to support property prices in the months ahead, simply based on an undersupply and ongoing maintained demand. I will admit, population growth is not the only thing that does impact on demand. There's other things as well.
Yeah, it's amazing when you look at those numbers, what you're talking about. You know, the listing numbers being down so low, but yet that rental property, you know, that's, as you say, over 50% was the decline on properties available to rent, which is just incredible. Putting pressure on that, as you said, the population growth and people wanting to live up here in beautiful sunny Queensland.
Yeah, I guess another way that we can look at demand as a measure from data is looking at sales volumes, and we consider sales volumes to determine how many properties are transacting in a particular market in a given space of time. Now, for Brisbane, sales volumes are still above the 5-year average, despite being slightly down year on year. So we're still above that 5-year average. This is according to CoreLogic. However, in other cities such as Sydney and Hobart, sales volumes have now dropped below the 5-year average. So sales volumes indicate that there's still a number of buyers that are transacting or willing to transact in properties, but this is also at the same time as we have decreased supply. So more buyers are still fighting for a diminished or a smaller volume of properties that are available. So again, another interesting fact that we can apply to get an understanding of those fundamentals in our market.
So people relocating, people want to live in beautiful Queensland, as we mentioned, to get jobs, the employment side of it.
Yeah, of course, unemployment is still at very low values Australia-wide. Queensland, though, and in fact, CommSec just recently published its State of States reports, and Queensland's come ahead, and we are now the number one nation in terms of economic prosperity, I guess you could say, compared to all other states across Australia. And the thing that really accelerated Queensland to the top in that report was our population growth. Queensland's seen a huge improvement also, though, in job opportunities. So jobs growth in the September quarter was at 4%, which is well above our 20-year average, which is just 2.4%. So you can see Queensland's presented as a state with a lot of opportunity for people in terms of that economic development. And that has positive effects as it runs through to property markets as well.
Along with that, I guess, is wages growth. I mean, you've got the employment side of thing. Everyone can get it. If you need a job, I think you can get a job, and you're actually going to get paid pretty well up here as well.
Yeah, I think there's a lot of talk about, people not being able to afford to pay for their mortgage as interest rates increase. Of course, when we see that there's huge opportunity in terms of employment growth, that helps to contain mortgage stress. That is, if people have a job, they're more likely to be able to pay their mortgage. But wages growth, it's probably the one thing that has been lagging, although nationally, wages growth increased 1.2% in the September quarter. So that is the highest level in more than 10 years. So some positive signs coming through then. But I will say, generally, households do have a very strong equity position, simply because house prices have increased in the majority of locations across the country over the last 3 years. So there's not going to be a huge volume of buyers that are going to be in at that negative equity position. So obviously 8 official cash rate rises throughout 2022. Despite that, with the available data right now, there's information to confirm that the number of customers that are in mortgage arrears remains at record lows and has done throughout the months of 2022. It's something to watch as we move into the early months of 2023, but at this stage, there's really no significant impact in terms of mortgage distress coming through in the numbers.
And then obviously people borrowing money, the banks are reassessing things. The banks are obviously keeping an eye on that because people are wanting to borrow that money to get into property as well.
Yeah, and I think that there's been a lot of talk about, banks potentially reducing their serviceability buffers in the months ahead. That's yet to be something that comes through. But if it does, that might free up some more money and certainly enable people to borrow that little bit more. But obviously, we've also got to watch that fixed rate interest cliff that people keep talking about. Borrowers with fixed rate loans that are expiring this year will be refinancing to variable rate mortgages. And that may be 3 to 4% above the interest that they have been paying for the last 2 or 3 years. So it's something to watch. Again, it's not going to impact all people in the same way. Those on lower incomes are going to find that harder to keep up with repayments than those on higher incomes. So it may be relative to household type and demographics in a particular location, but certainly something to watch as 2023 unfolds.
And another thing to watch, and don't forget about the infrastructure. What's happening out here, and especially in Southeast Queensland, the amount of money, the billions and billions of dollars that are getting spent on infrastructure. That's, obviously the 2032 Olympics and everything happening around that. That has a major impact on what's happening as well.
Yeah, there's a lot to get excited about in Brisbane in the years ahead. And, for those looking to buy the dip, it's certainly a great time to be considering Brisbane as a market of choice.
So if we jump into some dwelling prices and changes, if we go through some of the data, which I know you love to do that through the data side of things, if we look at dwelling prices.
Yeah, so this is data by CoreLogic up to the 31st of December. For the month of December, we saw Brisbane dwelling values decline 1.5%. Now, I have just checked at the time of recording, a couple of days before this will go live, the monthly change for Brisbane is actually recovering. It still seems to be negative, but certainly not at the same levels in December. So that monthly data will come out at the end of January, and we'll be able to update you in our next monthly update, but it does seem to be recovering. If we look at quarterly changes over the last 3 months, in October, we had a quarterly change of 5.4% in dwelling values to the negative. In November, 5.6%, and December, it was at 5.4%. So all negative values on a quarterly basis. But as at today, that quarterly change is down 4.5%. So again, we can see recovery in the numbers, and we're going to talk a bit more about what we're seeing on the ground a little bit later today.
And that was CoreLogic, and obviously, as we've mentioned in several other podcasts, when we start doing our updates, PropTrack do some data as well, slightly different numbers, and a little bit different to what we see on CoreLogic.
Yeah, so PropTrack relies on information from realestate.com. It should be in theory the same, but PropTrack only recorded a change in Brisbane dwelling values for the month of December of negative 0.18%, so quite different to CoreLogic. And in fact, they still showed growth on an annual basis for Brisbane dwellings at 2.18%. So it depends on which data you rely upon. And this is why relying solely on that quantitative data or the numbers can be a big mistake for a lot of people, because not all numbers tell the same story, because it depends on who's reporting them and how it's being reported and which data house you're getting the numbers from, because there is some conflicting information out there. And we always like to report on, whatever information is available, and then we overlay that with what we're seeing on the ground to come to a conclusion about what's really happening.
Let's break it up into houses to start with.
So again, we're looking at CoreLogic to start. According to CoreLogic, the median value for a house in Greater Brisbane declined negative 1.7% in December. So the median value for a house in Greater Brisbane is now at $786,198. If we look at PropTrack data for houses, and we have this information now, monthly growth for December, much lower value of decline at negative 0.19%. So really big difference there. And, we do often wonder why there's such a difference between these data sets. But, we're just reporting on the information that does become available through these data houses.
And the median price on that, when you look at those percentages, changes that 799,000, you're looking around about $13,000 difference.
Yeah. So when you look at a house, for CoreLogic median value, 786,198, and for the PropTrack median value, 799,000. So the median values are fairly similar, but the month-to-month price changes appear to be somewhat different.
Yeah. So if we jump into the unit side of things.
Yeah, so Brisbane units, back to CoreLogic data, the median value for units across Greater Brisbane declined negative 0.4%. So much more modest declines in the unit market compared to the housing market when we look at that CoreLogic data. And according to CoreLogic, $492,059 is the median value of a unit across all of Greater Brisbane. For units in the PropTrack data set, this showed a decline of negative 0.08%, so a negligible change. And they've got the median value for a unit in Greater Brisbane at $539,000. So overall, despite which data set we are relying upon, it does show that units have suffered a lot less than the housing market throughout the latter months of 2023 in terms of those median value trends.
So I know we touched earlier on the rental side of it and how that's changed. Let's have a look at some vacancy rates throughout the Brisbane area.
Yeah, so we talked about the availability of rental stock in terms of rental listings, and the fact that over the last 3 years, it's just, decreased by more than 50%. At the same time as we've had more and more people relocating. Remember, when people are relocating, typically they will rent before they buy. Not always, but that's generally the trend that we see. Vacancy rates, according to SQM research, in November, they were at 0.8%. In December, they increased slightly to 1.1%. That's usually a seasonal trend that we see throughout December and January, that vacancy rates escalate a little. This is when the majority of properties will align their tenancy agreements to renew. So we do see a little bit of a shift in tenancies at that time, but we will be monitoring this to see if that continues to increase in the next couple of months. But we do expect that will decline off the fact that we've got so few rental properties available. And of course, that always puts additional upward pressure on rents.
Yeah, a lot of people do line up their renewal, their tenancies around the start of the new year, and especially around the start of a school new year as well. So if we jump into the vacancy rates in different regions.
So Beenleigh up to 1.8% in December. So that's an increase of 0.4%. In the CBD, we've got vacancy rates now at 1.4% also. That's up by 0.4% between November and December. East Brisbane currently at 1.1%. So that increased by 0.3% month to month. Inner Brisbane, 1.4%. Ipswich, 1.3%. Northern Brisbane, this is the tightest region across all of Greater Brisbane still. It's sitting at 0.8%. So that's up by 0.2% month on month. Southeast Brisbane sitting at 1.1%. So only a small change there of 0.1%. Southern Brisbane, 1.1% current vacancy, up by 0.2%. And finally, Western Brisbane for December, 1% vacancy rate, and that's up from 0.8% in November, so a change of 0.2%. I went through those numbers pretty quickly.
Very tight rental market as well. And I do remember, and we talk about this a bit, I think it was, I'm not sure how long ago it was now, 12, 18 months ago when the CBD was something like 14%. Now it's 1.4. They've added a dot in the middle there between the 1 and the 4. So amazing changes, and those vacancy rates, we definitely need more properties here in Southeast Queensland. And
we really won't see a fast change in the supply of rental properties anytime soon. This is a big issue that renters are facing, because the only way to improve or increase the supply of rental properties is either for the government to supply more social housing, or for the government to incentivise or encourage more private mum and dad investors to purchase investment properties. Remember that Australia relies predominantly on mum and dad investors who are investing their life savings to provide accommodation for others. More than 90% of rental accommodation across Australia is provided by private mum and dad investors. And I know, throughout 2022, we had land tax changes proposed in Queensland. It caused a lot of investors to leave the market. We've talked previously about some of the research put out by the Property Investment Professionals of Australia. And it confirmed that a lot of people did sell out of their investment properties over the last 2 years, especially here in Queensland. And a lot of those properties were purchased by owner-occupiers. So it had the result of shrinking that rental supply and contributing to the current rental crisis that we do have.
So obviously with the tight rental vacancy rates side of it, the rents have obviously gone up again.
Yeah, look, in the housing market, rents appear to be stabilising. Again, it might just be a seasonal trend right now, whilst we have, more people relocating and moving into and out of rental properties. But the annual change for rents in houses in Brisbane's sitting at 13.4%. It was at 13.4% in November, and it's decreased slightly to 13% for houses in December. So a little bit of an easing in that rental price growth. Unit rents in Brisbane, though, still appear to be on the way up. So when we look at the annual growth, we're at about 15% annual price growth in rents in that unit section of the market. Got to get that word out. And what we find with that is that, the unit market typically produces stronger and higher yields anyway. So we do expect that the income return for investors in that space will continue to grow, simply because of a lack of available stock, and that puts upward pressure on those rents when tenants do apply.
So a little bit of a summary, if we run through a bit of a summary on what we're seeing, what we probably expect, and then obviously what we see on the ground. The market, we think in 2023, probably a bit more normal.
Yeah, hoping that it's a more of a normal market. I certainly don't see any significant price declines in the months ahead, despite what might happen with any further interest rate rises. And look, I don't see that we're going to have a huge bull market turning rapidly either. I feel that there's going to be some markets that we've already seen buyers return to quite rapidly, but I don't think that buyers will be as bullish on price as they were in that post-COVID boom. So perhaps a more normal market where selection of product type will become more important, and understanding those qualitative indicators, those on the ground measures, are going to become so much more important than the overall data in determining where we should be buying and determining what we should be paying, because it will come down to local market dynamics, how many people are turning up at open homes to determine, where the demand sits on a property.
Yeah, I think it will be really specific to certain properties. Good locations, good school catchments, A grade, as we call them, A grade type of properties seem to be very still successful and high in demand. Your other properties could sit on the market a little bit longer, but yeah, I think those good properties will definitely continue to sell. New builds. Definitely a bit of a flavour. People like the new builds, nothing to do, move in and enjoy. There's still that worry about construction and getting a builder and doing those types of things. I think the construction side of it could ease a little bit this year and settle down a little bit. But still, people are a little bit worried on that, which doesn't help the renovators and that sort of thing either.
No, and look, we have consistently represented buyers who have been fed up with the competition that is, in place for brand new builds or significantly renovated properties. And that's been something that's been consistent regardless of broader market conditions. We've reported previously there've been suburb records set even in the last couple of months of 2022 for brand new builds or brand new renovations in certain suburbs within Brisbane. So that broader trend in terms of median value changes. It's not applicable to every property or every location. So I think that if you are a regular podcast listener, you will know that by now. And hopefully, by being on the ground and reporting what's happening in certain pockets, we can help you understand that not all property is created equal.
Outskirts, as we move away from the area, the centre part of Brisbane, Greater Brisbane, thoughts on that?
Yeah, look, I know that in the post-COVID boom, we had a lot of property investors chasing higher yields in a very low interest rate environment. They were chasing high cash flows. We had a lot of interstate investors buying for cash flow. Now, of course, as interest rates increase, cash flows erode because as the expenses of a property continue to increase, you get less net return. If you're buying in areas where there's going to be a cap on rents simply because of affordability, that's a concern for some areas that might be in those outskirts where you've got lower income areas and people are already at capacity when it comes to rental affordability. All of these indicators must be considered before selecting a location, especially if you are a property investor. And it's certainly something that we always consider when selecting location for our clients. So I do think with higher holding costs, the net return is going to be less attractive for those types of properties. You might see reduced demand. And, the issue there is that if you've got 70 or 80% of the demographic are already property investors and investors leave the market, you really don't have any ongoing demand from owner occupiers for that product type. And especially if it's a low income area, you just don't have people that have the incomes to support repayments anyway. So look, I'm going to be watching those areas closely in the months ahead as interest rates do increase, just to see if there's any changes simply because of a lack of demand. And of course, if there's high supply, more people wanting to sell, low demand, that's when we'll see prices fall.
An area that we've talked about for quite a while, and we have been watching and involved in that area is the unit market, units, townhouses. We did mention a while ago a bit of a shortage of supply of units. People wanting to live closer to the CBD, people wanting that easier lifestyle. Some people don't want to mow yards on the weekend and trim trees and clean pools and all that sort of thing. The unit market has fared pretty well in the last 12 months. I think that's an area that we'll still want to keep watching, and I think will continue to probably perform fairly well.
Look, I think that it's driven by affordability constraints as well. People have decided that if they've only got a budget of $600,000, they don't want to live an hour from the CBD. Instead, they're happy to live 10 minutes from the CBD and compromise on how they live by living in a unit as opposed to a house on a bigger block of land. And I think we've seen that trend emerge simply because of the most recent price boom. So compromising on the property type for those lifestyle locations. So yeah, very optimistic still for the unit and townhouse market. But of course, not all units are created equal either. And I'd be avoiding those high density locations and focusing on those smaller boutique complexes in those blue chip areas. And I don't think you'll go wrong in those locations.
Before we wrap it up, just very quickly, on the weekend, obviously post Christmas, New Year, agents coming back to work, a little bit slower getting started, I think. But on the weekend, our team out and about, our team from Streamline Property Buyers, we get out and about and have a look at opens, auctions, see what's happening and how many people are out there. We attended just a bit of a summary, an auction on the south side, 9 registered bidders, 5 active bidders through that auction out of the 9 of them. So there's 5 people actually had a bid. And that property sold quite successfully at auction.
Standing room only. There was a lot of onlookers for there as well.
That was packed, actually. Had a good chat to the auctioneer as well. He had a lot of positive things to say about the market as well and the amount of people that are out and about. That's
a strong part of the market, and that was a price point above that $2 million mark as well. And there seems to be a lot of buyers still in that segment of the market. Although we are seeing some opportunistic buying in the market from, I'd say, about $800,000 up to about $1.2 million. It seems to be the market a lot of first home buyers have been active in. And, another auction that we attended on the same day failed to get an opening bid from a bidder in that price bracket, despite it being a quality product in a decent location. So it just goes to show that there's some segments of the market, some price points where there's opportunity, and there's other areas where you will be competitively competing with other buyers. So it's very important to understand the market that you're buying in to see where the opportunity sits and where it doesn't.
Yep. Another auction previously last year, they didn't sell the property, came back this year and sold at auction. Quite comfortably sold.
And I think, just to give a representation of that, in November last year, I failed to get a single registered bidder on this particular property, price point $1.6 to $1.65 million. Prior to Christmas, we saw it off market searching for around 1.6, and it sold with 7 registered bidders just on the weekend. 7 registered bidders after not being able to get a single registered bidder only 2 to 3 months ago. And it sold above their expectations before Christmas at $1.65 million. So it just goes to show there's been a shift in the market for some property types, not all. And it's about understanding the local dynamic and the local market conditions to understand where those opportunities sit.
And a mixture of other open homes that we attended, a few different properties, 20 to 30 groups through one. Another one had about 40 groups through. Another one in a local area where we're at, really high numbers, people walking through there. There was another one of our team went to, open home on Saturday. There was 25 plus 30 odd groups through that one. And on Sunday, they received 5 offers. One of them, plus there was another 2 wanting to put an offer in on Monday, but they sold to a cash unconditional offer straight away. So,
without giving details, because this is reserved for our Streamline Property Buyers clients, but just to give you an understanding of some of the suburbs that we're referring to here, they include Enoggera, Stafford, Hawthorn, Wilston, Barden, where else were we? Windsor, Gordon Park. So these are the sorts of locations that are attracting these sorts of numbers. And, as I mentioned, that also includes the auction that fails to get a bid. But obviously understanding what's happening at a local level is something that we do help our clients to understand. It gives them that market edge.
So Brisbane and all look pretty strong. As we said, fundamentals are great. Things are looking positive. The weather's great. We love it up here. So
you had to get your weather update in.
Yes. If anyone does interested in having a chat, reach out to the team at Streamline Property Buyers. We're always here to help and chat to people. As usual, I will let Melinda do a quick summary and a wrap up. And it's been great talking. Looking forward to catching up and talking more throughout the year. And we'll talk soon. Bye for now.
Yes, thanks once again for tuning in. I hope you've enjoyed this Brisbane market update. Obviously, Brisbane is a market with strong fundamentals. We work in this market, but we'll always be wanting to bring you the truth about what we're seeing and what the data is showing and what we're also observing on the ground. As always, if you do enjoy this content, please leave us a review on iTunes. Share this episode with friends and family. And that's the way more people find this information that can benefit them when buying property here in Brisbane. We look forward to speaking with you again next week. Until then, bye for now.